point. So with that, it is my absolute pleasure to welcome each and every one of you to what I know is going to be a very insightful conversation with Jeff Erickson, joining us from Forecaster, a partner of the Fourth Effect. We love Forecaster, by the way. We are also a very happy client. Jeff is an angel investor. He's a startup mentor. He leads strategic partnerships at Forecaster. Now, what Forecaster does, it helps you. It's helps you create these really effective financial models, helps you forecast. It helps you when you're raising capital. It also helps you, make sense of a lot of things that maybe if you don't yet have a CFO, you wouldn't understand. I'm sure Jeff will talk more about that. This is kind of based on our own experience using Forecaster as a client. Jeff is also the founder of the Startup Stack and Founders and Funders. Jeff is an active angel investor. He serves on some advisory boards. He previously was the founder and CEO of a successful consumer goods company that I think was ranked number 138 on the Inc. 500 list of fastest growing companies. That's really awesome. He is, passionate about startups and enjoys working with founders and mentoring entrepreneurs. So we are so excited to have you here, Jeff. Welcome. And before we dive in, I turn the stage over to you, I do just like to say a couple of quick things about the Fourth Effect. So, as a reminder, for those of you who know us well, I see many familiar faces and names. As you know, we're equipping startups and scale-ups to build and leverage fit-for-purpose advisory and governing boards. Make sure those boards help you scale and fundraise faster and more efficiently. We are matching you with the right advisors, sometimes the right board directors, the right investors to help you scale smartly and effectively. And for executives, for those of you on the other side of the marketplace, we're a gateway for you to break into the board pipeline, gain valuable advisory experience, and also step into the world of early stage investing. Sometimes you do both. Or all three things. So if you are not fully taking advantage of everything going on inside the Fourth Effect, please pop by office hours. We do them every Friday from 12 p.m. to 1 p.m. Eastern Standard Time. You can sign up for those inside the platform in events. This is a way for us just to be very hands-on and make sure that you are finding what you're looking for. So, as a startup, we'll make sure you're finding those right people, that you're leveraging our board seat exchange and our investment club to benefit you. If you are interested in exploring the other side, taking seats, writing checks, we can help you do that too. If you have not started a 30-day trial or have become a premium member, we will share the link to our platform tour, which we do every Tuesday and Thursday from 12 p.m. to 1 p.m. Eastern Standard Time. That is our kind of top of the funnel. It's even if you are a longtime member, but maybe it's been a while since you've logged in and really explored the value inside the platform, please pop by, because it's great networking in and of itself and in its own right. But also we can give you a refresher and just make sure that you're really getting what you need. And if you're new to the community, then we can get you set up, onboarded. It's essentially, live onboarding, and we can get you up and running. So that's what's going on in World Fourth Effect. We are also sharing a link to the board bootcamp on July 9th. We've been doing the board bootcamp for almost 6 years, 5-6 years. So, we have this down to a science now. It's very substantive. If you have not done it before, really recommend you do it. If you are a founder or if you have aspirations to sit on boards, if you've come to it in years past, come again, because I'm sure almost 100% of the content is now, it keeps evolving and changing. So there's a lot to learn. We also really help explain all of our substantive resources in the platform when you come to Board Bootcamp. So we've shared that. And with that, now I think that's all the housekeeping. Let me now, Jeff, officially turn the stage over to you to let you introduce yourself, in your own words, and take the stage away.
Breen, thank you. You did a stellar job on introducing me, and so I don't think I have to do a whole lot here. I will say that for all the founders out there, I have been in your shoes. I ran this company called Uppercase Living that my wife actually started, helped her raise some capital, and ended up running that for 10 years. And we sold it to a private equity group. And they made me stay on as the CEO for 3 years, which was a very long, painful 3 years. After that, I took a break and I ended up joining Carta pretty early on, and got to kind of see the rocket ship there with Carta, which was really fun. But the main thing there is it put me right in the middle of the startup ecosystem again. Love working with startup founders and helping them. We'll talk a little bit about some of the stuff I did at Carta where, it relates to raising capital and things like that. But then on the other side, as Breen mentioned, I've been on the investor side many times as well. And so I've got the perspective on both of those sides. I will say that's some of that experience is what led me to Forecaster, seeing that is one of the challenges we'll talk about today, is knowing your numbers and making sure that that you know your numbers as you're going into a fundraise. So with that, this is the topic we will be talking about, is preparing for fundraising. And really at the end of this, we want to go through each of these things and explain how this will, one, increase your confidence going into talking to investors, but two, think through as we go through each of these points, how this will increase the confidence of your investors in you as a founder. If you're an early stage founder, keep in mind that that investors, they don't have a huge track record like they would in like a public company or a more established company. They're betting on you as a founder more than anything. And so, being able to increase their confidence in you as a founder is really the key to confidently raising capital at an early stage. Okay, so these are the things we're going to talk about. Knowing your investor, going into talking to them, knowing your numbers, knowing your equity, knowing your pitch, and then taking all of that and putting it in one place, making it easy for the investors to have that confidence in you, to see that you know what you're doing. So that's what that'll kind of be the agenda here. As we go through this, we'd love to take questions as we go. I mean, we've got a decent sized groups, but put your questions in there, and Breen and Kat will stop me and we can address questions as we go. And then we'll try and save some time at the end to open it up for Q&A also. All right. So let's jump into the first section here. This is something that's overlooked by a lot of founders when they're starting the fundraising process, and that's doing the research on your investors. I've seen way too many founders where they put their pitch deck together, they start blasting it out to every VC that they can think of, thinking that, hey, we've got a great product or a great service, that we've got a great plan. They have money, they should invest in us. That's not how it works. So different VCs, if you look at VCs, even angel investors, a lot of times will have a thesis. VCs for sure. In fact, the capital that they have to deploy or to invest is governed by LP agreements. They're limited partners. So there are certain things that they can and that they can't invest in. Knowing what they can invest in is your responsibility as a founder going into the discussions. You don't want to hit a company that invests in medical devices and biotech stuff if you don't have that type of a company. You may find companies that only invest in B2B SaaS, and you are a consumer SaaS play, or you are a consumer products company. You can weed them out very quickly. two things that will help with is, one, it's going to help you to know the investors going into it. Do your research, know why your company is a good fit for them. And that's going to be super helpful and build your confidence, but build their confidence in you also, that you've done your research. Two, the other thing that I've seen hurt investors is when you do the spray and pray approach and you're just blasting out, spam emails to every investor out there. One, you can get put on spam lists to where all of a sudden now all of your emails start going to spam, and you kind of wreck your chances of getting in with the good investors that you should have done your homework on. And so, take that into consideration as you're targeting your investors. The approach that I recommend is getting a list of potential investors and making it broad. So it's kind of like a sales funnel, right? Top of funnel, you're getting the investors that could invest in your company. So if you're a B2B SaaS company, you're looking for investors that invest in B2B SaaS companies. You're looking at, what stage do they invest in? If you're a seed stage and, you're not going to go to somebody that says, you have to be, A, B, C rounds. If you need $5 million in funding, you're not going to be wanting to talk to companies that invest a minimum of 10 or 50 or whatever their thing is. And also, I think knowing, what stage they're at, what their minimum check size is, or their average check size. These are all things that you can find by doing some research up front. I listed a couple of things in here, or a couple of places where you can go. Crunchbase, PitchBook. PitchBook gets expensive, so if you know somebody that has it, that can be helpful. AngelList. One of my favorites is NFX Signal. They have a phenomenal database of investors, and you can tap into that and do the research, and it's going to at least give you a high level so you can kind of start drilling into it a little bit more. Most VCs will publish the companies that they've invested in. They're proud of it. They're proud of, these are the companies we've invested in. You can go through that and say, are we a good fit? Are we similar to any of these companies? But that's part of your research of knowing your investor. I'm going to pause there, see if we have any questions. And I did want to hit on, how we get in front of some of these investors real quick.
Okay, so there are a couple of questions. One is for me, AI powered tools, like whether or not you can recommend specific AI powered tools that efficiently compile these investor lists. I've heard of a few. I've heard of some recently that it might be worth it. It might even be like some of the LLMs, like a special license that can give you access. And then, so that's question number one. Question number two, timing. So what is a good time to start this process? It's tricky to balance this process plus running the business. And that's a good point. And then, there's a third question about NFX. It's on his slide. It's NFX Signal. So,
yes. Rachel just posted the link there in the chat. So awesome.
Okay,
so we
great.
got that one. Let's go to the AI tools. This is something you can totally leverage. Now, I wouldn't recommend using the AI to do the outreach. I mean, customize this, personalize that. I saw one of the questions that just came in was, how do we get into these VCs? So we'll talk about that here in a second. But the AI can help you figure out what companies, what they've invested in, what the VCs have invested in. We actually have a process internally at Forecaster even that we're identifying which of our customers have invested in or have been invested in by different VCs. And AI has been a tremendous help in figuring that stuff out. Very, very beneficial. You can do the same thing on, what are some of the companies, that XYZ VC has invested in? What is their thesis? You can use stuff like that to do your research. Very, very helpful. Some of the tools, I am seeing that a lot of times companies are charging for some of this to match you with, the right investors. And that might be a good approach. I think a lot of it you can do on your own is just spending the time. That does come to, back to one of the things you mentioned, Breen, that the question that came in is like the timing of this, because this can be time intensive, right? I'll tell you at Forecaster, Stephen Plappert, who's the CEO, he's raised 4 consecutive oversubscribed rounds. He knows what he's doing. He's one of the best fundraising CEOs I've ever met. And was one of the reasons I joined Forecaster. So one of the things that he has the luxury of doing is he has got a phenomenal co-founder in Logan Burchett. Logan is able to kind of run the company while Stephen focuses on fundraising. Stephen, we're gearing up for a Series A right now. Stephen is preparing to take probably a 3-month dedicated, 80% of his time and focus is on fundraising. It's a full-time, endeavor. And so, I mean, keep that in mind. At the same time, there's no way you can take your foot off the gas, right? Because I mean, you've got to keep the company going in order to get the traction that investors want to see. So having a great co-founder that can kind of step in and kind of, pick up some of the weight on your shoulders as the founder becomes really, really beneficial. If you don't have that luxury, it's a balancing act, running the company and fundraising, but you've got to put enough time and focus into it. There are some things that, maybe you can outsource some of the investor matching and stuff like that. Breen Cat, I don't know if you guys know Robert Harari, but he created a new AI solution. I'll make an intro to you guys. You should connect with them. But they've got an investor matching platform. There's some others out there. And so maybe you do outsource some of that.
Yeah, well, and of course, just have to mention the value, inside the Fourth Effect platform.
Yes.
Make sure that everyone on this call, that you are looking at there's a handful of investor lists and resources. There's also, we have 300 angels, LPs, and GPs that are in a database that you can easily search and filter, see their investment thesis, and reach out to them. Of course, we're also making matching those investors to you. So in your recommendations, but there's the proactive and kind of passive ways in the Fourth Effect that you can find these investors. A lot of times we also, just the authentic engagement, showing up, going to events where there's a mix is also good. So anyway, just had to say that. But yeah, thank you. All great points, Jeff.
Okay, the resources at Fourth Effect fit right into this. I mean, especially as we get into this next thing is how do you get in front of investors? Once you've identified them, and maybe Fourth Effect can help you identify them through some of those initial lists and stuff. But even more importantly, making a warm connection or having a warm connection is 100 times better than a cold email. And I'll putting on the investor hat, I'll tell you, I probably get hit up with 20 to 30 requests to review pitch decks every week. And I don't have time to look at them all. In fact, unless I know the person, I'm probably not looking at it because I just don't have the bandwidth or the time. Cold outreach, I won't say it never works. I'll say that a warm intro works 100 times better. If I get if Breen sends me a company and says, Jeff, you should totally look at this company. They're amazing or whatever, and they fit your thesis. I know you're investing right now in these types of companies. I'm going to look at that company, right? In fact, I'll probably set up a meeting. So the warm intro, 100 times more effective. The way to do that is sometimes you have to go a little bit deep. So find the investor, one of the partners or somebody at, different people at the investment firm that you found that would be a good fit. 2, why you're a good fit for that company, that investor. And now it's like, how do I get connected with, John or Sally or whoever at the VC, who the VC is? looking on LinkedIn and seeing who are the connections, the mutual connections you have. I get hit up with this all the time. It's like, hey, Jeff, do you know, I see you're connected with so-and-so on, at A16Z or whatever. It's like, how well do you know them? I'm not going to make a recommendation if I don't, believe in the company or I don't think it's a good fit. So do your homework and help whoever you're asking for a warm intro from, help them understand why you're a good fit. And then, see if they can make a connection. Sometimes you have to go a little bit deeper where it's like, hey, somebody that knows somebody at that firm, but whatever you can do to get warm intros, go after it. Okay. We spent a lot of time on that. So sorry, I hope that's helpful. I hope it was a helpful drill there. But this next section is super important. This is one of the things I am sure all of you know, Mr. Wonderful, the guy at Shark Tank, Kevin O'Leary. I was on a pitch competition with him. I wasn't pitching, fortunately. But I had two of my friends that were pitching, and this was thousands of applications, and they got chosen for the top 5. So we had sponsored this event with Mr. Wonderful. He was the judge. And the first thing he said when they came to me, he said to the 5, lucky founders was, if you don't know your numbers, I'm going to just tell you right now, I'm going to rip you apart. And that was how the pitch event started. So I've always remembered that, but I think there is a truth to that. You have to know your numbers as a founder. This is where this is the language that investors speak. So being able to speak their language is critical. They're looking at things like, MRR and ARR. What is the recurring revenue? That's what they're excited about. What is your growth, trajectory? What are your gross margins? These are all things that investors want to know. And if you want to gain the confidence of your investors, you're going to know your numbers backwards and forwards, like nobody else. One of the things that I have heard and experienced seen is, and Kat and Breen, this might be relevant for some of the founders in your community, but female founders often get grilled on their numbers more than their male counterparts. And as unfair as that seems, when I've consulted with female founders, I've said, okay, let's turn this into an advantage. We're going to crush your numbers and you're going to know it so well that this is going to be an advantage, right? So everyone should know their numbers, but if you're a female founder, make this an opportunity to really shine and double down on nailing your numbers. And you already know that you're going to get grilled on it. It's like, let's take advantage of it. Make it an advantage. Some of the things as we get into, that you want to know is, knowing your customer churn. A lot of times people overlook that, they don't factor in, here's what our churn is. Investors are very, very adept at looking at financials, and so your projections, they're going to dive into it, and it's probably not going to be on your first, pitch, where they get really deep, but in order to get an investment, they're going to probably go fairly deep, especially the later you go. Okay, so I listed some of the common, metrics or things that you might want to at least know. Your customer acquisition cost, your average contract value, how long customers are sticking around, those types of things. It might feel kind of overwhelming as a founder, but it really doesn't have to be. And this is where the value of a financial model comes in. So Breen talked a little bit about this at the beginning. This is actually what drew me to Forecaster. So when I was at Carta, I saw one of the biggest problems that founders have was knowing their equity. And we're going to talk about that next. And how in taking on investments going to impact your dilution and all of that. So being able to map that out, super important. The other biggest problem, maybe even a larger problem than that, is seeing that founders struggle to know their numbers. Having a good financial model that tells the story of where they're going and being able to see that a founder understands the metrics that matter to their business, the key drivers that they need to focus on. This is what becomes really essential and where you're going to gain the confidence of your investors. So your financial model is going to tell you how much you need to raise. I mean, how many times have you gone into or how many times have I seen founders come in and we'll say, you know, how much are you raising? They're like, well, we're thinking between, you know, 2 to 5 million. And you're like, okay, well, is it 2 or is it 5? I want to, some of the best presentations I've seen is it's like, we need 2.75 million and it's for this. This is how we've mapped it out. But being able to run scenarios and saying, hey, if we only raise, you know, let's say that we only raise $1 million. Well, here's what we've got a plan for that. Here's our financial model. And we've got a plan for that. We're going to just have to grow slower. But that's where investors start to salivate. When you can show them a plan, they start to ask questions like, well, what if you raised 3 million instead of 1.5? We ran that scenario as well. Here's what, if we raise 3 million, we're going to grow twice as fast and we're going to get to 10 million by year 2 or whatever it is. But now you've got the story and all of a sudden the investors are going, okay, what if we put 5 million in? And now you start, now you've got them thinking the right direction. It's like, okay, maybe we do 2 million, but we're already thinking about, you know, the next round because you guys know what you're going to do with it. Once you hit these milestones, it's like you can see that path. The key is that the founder has already mapped this out and they've got the plan that has created the confidence in the investors. So, okay, I saw a couple of questions coming in, Breen, or anything relevant that we want to.
Yeah. So there are a couple of questions targeting pre-launch founders. So one question from Priyanka, can you talk about good traction numbers for pre-launch founders? And do you think it's worth raising pre-launch? And then there was a couple of other pre-launch related questions. So I just want to lump them together. Okay, there's another one for Maria. What about pre-launch? Which are the metrics to become investable? So, and then there's more questions, but let's start with those. Okay.
Pre-revenue or pre-launch it's a tough spot, right? Investors, you're throughout the word that you're going to hear, traction. They want traction. And that traction doesn't necessarily have to be revenue. So, but being able to show and demonstrate that there's demand for what you're doing is really the key. So I'm going to give you a personal example. The last investment I made was in an AI company. They were pre-product. I happen to know the founder extremely well. And so, you know, I mean, that obviously had a huge impact. But what they did, and they raised from, you know, I mean, they had the founder of HubSpot, the founder of Row, I mean, all of these people, the Hustle Fund, they had some great investors that came in. The way that they got this was they demonstrated that they had pre-sold their product. They went out, this founder went out and said, hey, this is what we're building. If, you know, once we're done, here's, you know, we're thinking 3 months, we're going to have a working prototype and they're going, and, you know, will you guys, if we get this to this point, you know, are you guys good to start paying like $300 a month? And he started signing contracts, you know, that they weren't binding, but it was like a letters of intent, right? He had $120,000 of letters of intent before they had even started to build the product. Okay, so those are the types of things that give you confidence that, you know, they know how to sell, right? They're generating revenue already. It's like, all right, they've already demonstrated there's demand for what they're doing. They're already pre-selling. I saw that Kat mentioned wait lists. So if you've got a product that you're in the process of building, or if you can create a wait list, again, that demonstrates demand for what you're building. Now the question becomes, it focuses from not that there's demand and is there product market fit, but now the investors are going to start to say, okay, now how realistic is it that you're going to actually get to building it? And is that where our money's going? Right? It's like, okay, so our money, if we put in $1 million, that's going to go to your development team or whatever it is, and you can map that out and show me exactly what you're going to use it for. Now you've got a product and you've already got the demand built for it. It's like, I'm way more excited about that than a company that's just saying, give me $1 million and I'll build a product and then we'll go find customers, right? So.
Well, and kind of on a related note, there's a question about, when validating demand by building a wait list, how do you decide how many signups is the right number? So like when can you feel, is it 120,000? Is it 10,000? Like when have you gotten there?
Yeah, it depends on the product, because I mean, there are companies I've talked to just recently that have, 5 new customers lined up. One company has 2 customers, but they're a massive customer. So they're like in beta testing with, a big healthcare provider or something. It's like, if that gets adopted on the small level and branches out, it's like, it only takes a couple of those to make it work. Now, vice versa, if you're selling a consumer product, your wait list can't be 2 or 3. It can't be your mom and dad and all your relatives. It's got to show that there's product demand outside of your network.
Fair.
And yeah, hard to pin down a exact number,
right.
But
yeah,
it's helpful.
No, totally fair. And then, okay, so now there's 2 other questions, a little different, but interesting. One, okay, so this relates to sometimes, okay, so say you're really doing a good job doing your homework like you talked about before, and you find these investors where you really match their thesis. One of the downsides is that that might mean that their portfolio companies include your competitors. So what do you do in that situation? Like, should you be worried about that conflict of interest? Are they just meeting with you to fish and get as much information as possible about your business to help their portcos? I feel like this, anecdotally, this has cropped up a lot. I think a lot of founders have this experience. So any insight to share there? And then one other question, male and female founders get treated differently, as you pointed out before. Any ideas how to turn it into an advantage for women when the wait list or the potential is not really something that helps them? Because we get held, a lot of times females will get held to a standard of, you have to actually have the revenue. We don't care about the potential. So I don't know if there's if you have any tricks for that. But like, first question is conflict of interest, portcos, and second would be, can we turn this into a competitive advantage that can be a different standard for underrepresented founders?
Amazing questions. What an incredible group you guys have put together here. Okay, conflict of interest or conflicting and portfolio companies. Definitely bring that up right at the beginning. And this goes back to doing your research. You're gonna uncover that on the front end, and you're going to know, and you'll be able to address it right up front. It's like, hey, we know you invest in this company. Does that create a conflict of interest? In situations like that, I mean, I always say, don't require an NDA don't ever ask for an NDA when you're talking to investors. Something like that, if that's a concern, that might be one where you at least bring that up and say, hey, let's put it on the table. You've got a competitor that you've invested in. Typically, I'd almost stay away from a lot of those types of investors unless you think that's, unless you've got a compelling argument. For a VC firm to make an investment in a competitor, they have to create walls, and it's actually very difficult. I've seen it done, but there's legal things. They have to have different partners. They have to kind of create that firewall. Keep that in mind when you see a VC that is invested in a competitor. I would be careful. So that would be me if just in my experience. So can it be done? Yes. It comes with more challenges. There's probably better investors for you, especially if it's a direct competitor. I think there's too often conflicts that might make it so it's doesn't make sense.
Oh,
So.
super helpful, and that's definitely what I've heard too. And then second question, the kind of raising on potential versus what you've already validated. So chicken and egg. How do you overcome that chicken and egg? And this is not only for underrepresented founders. I think for any early stage founder, depending on your business model, this is one of the unbelievable challenges when, if you can't get funded based on the idea, then how do you actually get to the proof without having the capital to build the product?
That is hard. And I will say that those that have an advantage are second-time founders. If it's your first go around, you're at a disadvantage raising that first round without traction. It's hard. So something I have seen work is to find a co-founder or somebody on your team that's been through an exit that, creates that confidence. It's like, oh, you just hired so-and-so that was at, this company that that everybody knows about. So surrounding yourself with folks that do build that confidence, just because, if you look at who gets funded, it's second time, third time, fourth time founders, but they've done the work to create that confidence in the investors. So that's one thing. And I think the other is, again, having a plan of action and knowing your business extremely well, it does go a long way of, saying, hey, here's what we're going to do, and coming with that confidence. And having talked to hundreds of potential customers, I think builds that credibility, builds the confidence, builds your confidence, but also the confidence of the investors. So, all of those things can help. I don't know that there's a fix all for any of that. Revenue does seem to fix a lot of problems. So if you can start to get sales, even if they're pre-sales somehow, that tends to be the best way to fix problems.
Right. Fair enough. Look, if you had the answer, how do you spin straw into gold? That's what everyone wants to know.
Yep.
But thank you. Good advice and really good points. Okay. So there's so many questions coming in. So I know you have a lot to cover.
Okay. We better keep going here, or we're not going to get through much more. I did want to, just emphasizing the importance of your financial model. Hopefully we've hammered that home. This is why I joined Forecaster. That's what they do. They basically, you can customize a dashboard. I think Breen and Kat have seen this, where maybe you're not there quite yet, but you can create your customized dashboard. So identifying the metrics that matter to you as a founder, and to your investors, you can have that in front of you on a daily basis. And so the key to having a good financial model, or a great financial model, is being able to track against it. So one of the things I have seen be really beneficial is having a financial model that you have been executing against, and being able to show that. The confidence that you get going into a fundraise, going, hey, here's our financial model, and we've hit projections or been within 90% of our projections for the last 6 months. And here's what we've got going forward. The confidence goes way up as you start to show those types of things. One, it shows you as an operator on top of things. And two, it shows that your projections aren't just pie in the sky. So having that history building up to your fundraise, super valuable. So anyways, that's what Forecaster does. quick shout out. We do have a partnership with Fourth Effect. If you want just a quick demo of the Forecaster platform and how it helps you know your numbers and all that, just take advantage of the, I put up a QR code here, and that will actually take you to where you can sign up for a free demo. And you'll also get the discount that we have set up with Fourth Effect. So for this community, you get 20% off your first year, plus you get 10 free hours of dedicated financial analyst time. I think, Breen, you and Kat took advantage of this, and I don't know if you've already gone through the process of having them build that out, but super valuable, and we're extending that to all of your community. So, okay. Let's go on to the next thing, because we got to get through some of this. But the other thing I mentioned briefly was when I was at Carta, I saw the challenges that founders have in understanding and knowing your equity. Equity is a tricky thing. If this is the first time you've been through it, it's like, how much do I give up? I mean, I've got, and when I bring on an investor, it's like, oh, what is that going to do to me and everybody else that has shares in the company, right? So this is where having a cap table management solution is very helpful. And I don't know what you guys recommend, Breen or Kat. We've had tremendous success with several of them. Do you guys have a preferred partner or anything that you guys recommend?
We do indeed. Fidelity Private Shares. They used to be Shoebox. Yeah.
Love Jason, love Charlie. That I would highly recommend Fidelity Private Shares. So
yeah, me too. As a startup.
Yes, well, they're fantastic. So great, and it sounds like you probably have a special offer there as well, where it's actually free for companies that have less than 25 shareholders or something. So, anyways,
yes, and if you need a 409A, it's the best deal. It is the best deal I've seen.
I love it. Love it. Okay. So the key here is to get on a software platform. Doing this in spreadsheets, it doesn't make sense anymore, because I mean, it's like I said, it's free to use their software up until you hit a certain point in your company. But what it's going to be allow you to do is to map out, like, what happens if we raised $1 million? What's it going to look like if these are the terms, and we've got we're raising on a safe, for example, and it's got a, $5 million valuation cap on it. You can plug that in to the software and kind of map out. It's like, okay, so if we raised a Series A down the road and that converts now into equity, what does that mean? So many founders get into trouble by stacking safes. Like, because typically you'll go out and raise under a safe or a convertible note, kind of in that early stages. If you don't know what you're doing, you can start to just say, oh, somebody else wants to give us money. Things are going really good. Okay, we'll take more money. You've still got the same valuation cap and you're doing better. If you start doing that, all of a sudden, I've seen so many founders where they hit their priced round, and all of the convertible notes and safes now convert into equity, and they haven't factored that in. And all of a sudden they're like, whoa, we didn't know we were giving up that much equity. So don't let it catch you by surprise. So working with somebody like a Fidelity Private Shares, can be very helpful that way, and being able to kind of map out what things mean as you're raising capital. The other thing I wanted to hit on is just making sure that your cap table is up to date and accurate. This is so much better to do as you go. If you're promising shares to a co-founder that's coming in, or to somebody that just made an investment, make sure it's documented, that you've got all of your documentation in a place where you can, that it's up to date. And again, a cap table management platform will help with this, in having all the records and having it up to date. One of the biggest things that deters fundraising is time. If you are asked for your cap table and you have to go back to your attorney and say, hey, our investors just asked for an updated cap table, and as it often does, it takes 3-4 weeks for your attorneys to get to you. That 3 to 4 weeks, your investors have probably talked to 100 plus other companies, and you're not top of mind. You've lost momentum. Being able to just say, oh, you need our cap table? Here's a link. There you go. It doesn't slow down the process. So super important. The last thing I'm going to mention here is make sure you have a good startup attorney. And the startup is emphasized because it can't be just any corporate attorney or any type of attorney. Make sure the attorney that you're working with has worked with hundreds of startups. They know what they're doing. And don't use them for everything, but use them for the things where if you're going to sign something, run it past them. I know they're expensive, but run it past them. Make sure you're not making some bad decisions here. So I just saw somebody recommended. There's some great, affordable attorneys out there. Sometimes they'll defer costs until you raise your round, things like that. But have a good startup attorney. Super important. Okay. We'll save any questions if we have any time at the end, but feel free to keep your questions coming in. The next thing is knowing your pitch. This again is something that is very critical as a founder. In one, having your pitch deck, there's a reason that you have certain things in a pitch deck, and there's kind of a formula there. It's because these are all things that investors typically are interested in, right? I'm going to just point out a couple things that I've seen founders mess up on. One is not defining the problem well enough. Keep in mind, most investors aren't experts in whatever you're doing like you are. You're the expert. And a lot of times you're so excited about what you've created that you spend all the time on talking about your product or your service or what you're doing. So you spend all the time on the solution without establishing what the problem is. The investor has to understand that there is a problem and it's a massive problem, and they have to understand what it is, right? In order for you to go to that next step. So take enough time to help them understand what the problem is, not on an expert detailed level, but just something that they can get and relate that, oh, I've established there is a problem. I'm excited to hear how you're going to solve it, right? So establish the problem, make sure you spend enough time there. Don't spend too much time on your solution. This is another mistake so many founders get bogged down. Investors aren't interested in every little intricacy that you're so excited about, every little feature, every little thing, how great your product is. That's not, they're more excited about how much people love your product. So getting into, your financial model, to what the opportunity is, they're way more excited about that than every single detail about your solution, even though that's what you're probably really excited about, right? So keep that in mind. Make sure that you're hitting the things that investors are excited about. So as you're presenting and creating your pitch deck, try to put an investor hat on. It's like, what are they interested in? They're interested in making money, right? How are you going to tell the story about how your investors are going to make money? How can you paint that vision that if you invest in this company, you're going to make money and it's going to be massive, right? That's what investors want to hear. That's what they're excited about. So keep that in mind as you're crafting your story and your pitch deck. And then the last thing I'll mention here is practice, practice, practice. Every chance you get to pitch, take advantage of it, because you'll get better and better and better at it. Henry Ward, who's the founder of Carta, to raise his pre-seed round, he pitched over 300 VCs before he got a yes. And so keep that in mind. And this is I think $8 billion company now. Nobody would invest. And his pitch got better and better and better. And he started to figure out, what's holding people back. Take every advantage you have to pitch. I listed two resources here that I've really liked. One is the Pitch Deck book by Tim Cooley. It will help you at the very minimum, just kind of make sure you hit the things that are important to investors. You're not leaving stuff out. Super easy read, and very simple, but powerful. The other thing I just came across, speaking of AI, was pitch2.vc. This is something new that I came across, but a colleague of mine that I've worked with a little bit created this company, and it's something that you can use to pitch to avatars, different VCs, but you can practice and start to get questions back from VCs. The benefit you get from doing that and from pitching a lot is you can start to anticipate the questions that you're going to get asked. So every time you pitch and you start getting questions, if you keep getting the same question every time you pitch, you can start incorporating that into your pitch, right? So anyways, practice, super helpful and beneficial. Okay, the last thing we're going to talk about is putting all of this stuff in one place. So seriously, if you've done your research on your investor, you know the investor, you know why you're a good fit for them, you know your numbers, got it all mapped out, you're comfortable talking about, what metrics matter to your business, you know your equity, how it impacts things, and you have got your pitch down, you should be ready to talk to an investor, even if they say, hey, can you come in and pitch today? You should be ready to roll. With one other thing that will help you to make this a slam dunk and to create confidence for you, but also your investors, is to have a fantastic data room that is all put together and easy to navigate and ready to send out before you go and pitch. So a great data room will have, everything that an investor would ever ask for. And it's all going to be in one place. It's going to be easy to navigate. You're going to have your pitch deck in there, your financial model, your cap table, access to all of these things, the legal docs, your, intellectual property docs, all that type of stuff. There might be certain things that you kind of guard and you say, hey, once we get to this level of diligence, we can start, release a little bit more in there, but it's all ready to go and it's all up to date. And you don't have to go back and say, oh, let me get that for you. You send them a link, it's all there. It won't slow down the process and kill your momentum. Having a great data room is like putting a bow on it, right, for your investors. So this is something that's super, super helpful, super important. I know there are some platforms out there that will let you kind of timestamp things and kind of see who and when folks come in. But I've also seen it work really well with like just a shared drive in Google or a Dropbox or whatever you're using. And so as long as it's well organized, easy to navigate, and you've got everything that investors would need right there at their fingertips. Anyways, I don't know, Breen, if you or Kat have anything to add to that, but this is how I kind of put a bow on things. It's like having the data room where you've got everything we just talked about all ready to go. One, you as an investor, as you go in, or you as a founder going into pitch, any question you get from the investor, and you're like, yeah, it's in our data room. Bam, we'll send you the link. Your confidence, super high, right? The other thing is their confidence in you, because they see how well everything's put together, their confidence is now super high. They're like, oh, you've already got all of the, every non-compete for every employee, every, technology assignment and all of those things, all of the stock option agreements, everything's here. You guys are so put together. It doesn't throw up red flags that we have to overcome. It makes it so they can make a decision a lot quicker. So, and again, time kills more deals than anything. So having everything there keeps that momentum going and doesn't throw a wrench in things. Okay, one last thing is we have I mentioned Stephen Plappert. We're raising our Series A right now. He's using this process to raise our Series A. He's raised 4, successful rounds in the past using this playbook. Feel free to use that or download this playbook for free. It's a fantastic resource. I've shared it with so many founders that have always hit me back and gone, thank you so much. This has really helped us plan out our fundraising strategy. And it's super simple and easy. So take advantage of that. If you didn't get it, I'll let Breen and Kat send it out to you if you need it in the future. Okay. We've got like 3 minutes for questions. I'm happy to stick around for a little bit longer if you still have a little bit of time.
Ashish, yes, I see you've raised your hand, and I know Sonar, I saw you raised your hand as well if you're out there. So why don't we do Ashish first, then Sonar, and then anybody else that has questions that, you know, if we can fit you in 3 minutes, you can raise your hands as well.
Oh, can you hear?
No, you know what, Ashish, we can't hear you. No.
Do you want to type it? Maybe type it in the
yeah.
chat or something?
Why don't you type it in the chat, and then Maria Lentz, I see your hand raised. Sonar, I don't see your hand raised. So Maria, why don't you ask the question, and then Ashish will come back to you.
Okay. Hi, thank you, Jeff.
Yes,
for
Maria.
everything that you have explained. So I'm a founder and my company is pre-launch. I'm doing the beta right now and it's in women's health. So
very
difficulty for investors. I'm looking for angel investors. So right now my data room is on a drive. What should I have been in the moment that I am on the data room that is essential?
Great question. I have a data room template that I can share with Kat and Breen.
Yeah.
And if they want to share that out, or you can ping me here. Here's my email address, and I can send it to you. And that kind of gives you a comprehensive view. I mean, there might be things in there that aren't applicable for your company.
Yep.
But it gives you a good list and a way to organize things for your data room, so you can kind of go through that list. So I will say one thing on the data room is that Steven, our CEO at Forecaster, has done such a phenomenal job at creating the data room that it's almost cut down on the amount of due diligence our previous investors have done, because they kind of go in there and they start poking around it and they're like, okay, they got everything. It's like, if you've overdone it, it's like, it creates this confidence like, wow, they're really on top of it. So.
Well, and one other thing, Fidelity Private Shares has a phenomenal data room. So, and it is structured exactly as the diligence process unfurls if you're doing a priced round or anything like that. So, Sonar, floor is yours, and then yeah.
Thank you, Jeff. Thank you, Breen and Kat. One. So my question is quick. So I will how do you kind of see like paid pilots that are done pre-revenue phase? So, and basically, is it also like kind of counting for revenue that we can say that, okay, we have like these paid pilots going on with Mayo and they are paying already 300,000 and such. So, and another question correlated with that, how is like the grants that companies receives on the on the stages? So how that kind of like seen in an investor eye?
Excellent questions. So first off, paid pilots, phenomenal. Yes, love it. If you can get paid pilot programs, now you've shown interest in the demand. You've created that. What you're building is people are excited to pay for being part of this, and you're going to get in. You're going to learn a ton through the pilot, right? But now you've got somebody paying you to do something because they find it valuable enough to get their problem solved, right? So yes, that's powerful and definitely something to lean into. Your other question was, I remember,
grants, like NIH, NSF grants. Yeah.
Yes, absolutely. Grants, best type of fundraising out there, right? I mean, they're non-dilutive, and I was talking to a founder yesterday, and he was like, okay, so we've got this grant that's possible through the state organization. They'll match, they'll match any dollars coming in. And he was kind of thinking that, hey, we have to go out and raise another, $100,000 to get 200, to get a match, and we need 200,000. Well, we start talking. I'm like, okay, so you've already got 80,000 of the 200 total that you need to match, or that you need to raise. And he's like, well, I haven't closed the 50. They've just kind of committed. And I'm like, well, what you do is you take that back and you say, okay, your investment as an investor is going to get matched by what we do with the state. As an investor, I love that, because now I just got double the value for my investment when you can get a matching grant that I open up or help open up. It's like, if you can get grants, fantastic.
Well, awesome. And I know we're over time. I know there's still some questions coming in. I'm not sure, Jeff, if you're willing to hang out to answer them. Ashish is back. So
Can you hear me?
Yeah.
Yes. Hi, Ashish. Should we take one more and then we can, and you guys, you can follow me on LinkedIn, hit me up there. And Breen and Kat can also reach out to me anytime. So
yes.
Okay. Hi, Jeff. Thanks for your time today. And thanks, Breen, for organizing this. We have a very particular business where we've reimagined the entertainment business, and we are able to make superstars in 9 months now. It's like we are the VC. We've been investing in talent over the past decade, and we've cracked a model where it's as predictable as making an aircraft. So once we say that this bird is ready to fly, it flies. We've de-risked the entertainment business by saying 9 out of 10 that we pick succeed, unlike where startups and talent, people say that, hey, 9 out of 10 fail. So we've cracked that piece too. What we did is we built boutique businesses over the years, from the incubators to the production houses, in a very particular way. I have a strong background in music, tech, and business, coming from the Quincy Jones camp. And now, when we explain it to some investors, I think it's maybe the storytelling. We already have like $1 million contract that's already come in. My wife and I, the cap table is just between us. We've not diluted it till date. We've seeded it ourselves by putting in a couple of million for a few years. And now all those boutique businesses have been combined into what we call the global icon. And the global icon makes superstars in any language, any genre, any country, and it can apply to anywhere. So we are ready to scale it up now.
Okay.
How do we tell this story in a very effective way to get the attention and someone at least hear us out? And we got into this not to problem solve. I'm more like the Star Trek guy for exploration, collaboration, and within there's transactional profits. But yes, the problem we solved was that the music business, which is a tomorrow business, takes a lot of time, too much investment. We've shrunk it down to 9 months now. It's like a 9-month accelerator. We've already got Grammy winners, over 10 million listeners on our platform, and we are ready to scale. So I don't know whether it's introduction within a network. There is tech involved, very lovely tech. It's a very brick and mortars model too. So it's what we call the best of the past and what's come today. And we built it, it's running. So now if something like this, does that make sense? Is it the storytelling to be better? What is it that will get? And we've got all kinds of different matrices, like you said, it's not only some revenue that we've got. We've got success on the platform. We've got the kind of following that we have. We've got Grammy winning talent that we can showcase. So need help.
No, great question. One thing I would say is working with Kat and Breen, they can help you map out your story, right? I think that's probably where you're at, because I mean, again, we talked about putting the investor hat on as you're creating your story. What do the investors want to hear? They want to hear how you're going to take this company and make money, right? So if you can tell that story and show them how you're going to use their investment that you take in and turn that into more customers, more revenue, that's what they're going to be interested in. If you can put that as part of your story and say, this is how much we need, this is how we're going to use it, and this is where it's going to get us, that becomes the story that you can start to share with investors that is going to catch their attention.
Sure. And we have that. And like you said, we have the iteration. So we have everything ready. We have iterations ready, like you shared earlier on, and thanks for that. Where if you, let's say, if you put in 3.5 as a safe round, this much time will be able to achieve this much. If you put in 1 million, it's this much. If you put in 10 million, you put in 195 million. We've worked out all the kind of numbers, and we are generating some revenues now. That's why we are ready to scale.
Okay, so that needs to be part of your narrative right there. Is, you know, this is what we're building. Again, I don't know what your pitch deck looks like or that, but having that really concise,
yes,
to where you can get that down and get that that story pinned down to where, you know, you can present it to investor. And then it's identifying investors, you know, the right investors in, you know, that are open to investing in that type of a company. So doing a little bit of research on the front end, I think, will be probably your next step.
And
okay.
And by the way, in the chat, Ashish, you just have somebody wrote in, Angel Gambino says, I'm judging a music startup pitch event today. Maybe you should pitch at the next one. So why don't you reach out to Angel Gambino, who may or may not still be on this call, so that you can find out about that. And also make sure that you pitch at our monthly Pitch Please, you know, which is like the top of our funnel, you know, to help all of our investors get to know the startups that are fundraising. And you can also, you know, create your fundraise listing in our investment club if you're ready, like it sounds like you are.
Yes.
So those are some things for, you know, ways that we can get started helping you. You know, like Jeff said, come to office hours and we'll make sure that, you know, that you understand all of this, you know, have access to it.
Lovely. Thank you.
Okay, awesome. Well, thank you, Jeff. As you can see, people have been, you know, struggling to let you leave. So thank you for coming, and thank you for sharing. And you know, everyone, yes, this recorded session will be available. We'll circulate these materials, and your data room template. That sounds like a great resource. We'd love to, you know, take that from Forecaster and, you know, include that in our resources. So, you know, maybe that's something we can talk about. And yeah, just can't stress enough how Forecaster is such an important piece, a tool like Forecaster in everything that we're discussing. So we believe in it. You know, please ask us questions and, you know, avail yourself of the value of it if you are fundraising.
Awesome.
I think we have to find a schedule a part 2.
Yeah. Yeah.
We can do part 2. We can do a deeper dive. But you guys are awesome. Thank you so much for putting this together. You guys add so much value to the community, and thank you.
Thank you, Jeff.
You are welcome. Thank you.